Good evening, everyone, and welcome to week 5 of your Web3 and Crypto Basics Trading Bootcamp. We launched this bootcamp as the start of our education hub. So this is the first of many programs that are going to be coming to you. We are delivering these ones live. We have been doing this since the 28th of July. If you have found this recording somehow, if you found the event and this is your very first session, it is okay because everything is recorded and we have been putting it into our education hub that we are building out. And we will be adding a whole bunch of more courses in there. So if you have not signed up already, you can go and do that by scanning the QR code. Renee, actually, if you might even want to pop in the link to the landing page where they can sign up and they can find out some more information about the bootcamp, you can go ahead and do that. And that's where you're going to get access to all of the past recordings, the learning materials that we put in there for you. And we have partnered with EvolvH3R, Jana Crypto Queen, All Things Blockchain, and Finsightful, who you're going to be hearing from Ben very shortly, to come together collectively to provide this education to you. So if you haven't signed up already, we highly recommend it. It's 100% free. Today, Renee and Ben are going to be taking you through the fundamentals for crypto traders. On Mondays, I take you through the Web3 basics. So we've got lots of education content for you to explore. Tonight, you're going to be hearing from Ben, who is one of the co-founders of Finsightful. They are one of our education providers. We've got some exciting new short courses that are going to be coming available, taking you all the way from TradFi to DeFi. But tonight, he's going to be just sharing some of his tips and tricks on how you can become a good trader, because it takes time and you really need to know the fundamentals. But before we jump into that, I just have a few quick announcements and then I'm going to hand it over to Renee and Ben. If you missed last week's session, as I mentioned, you can join the group. Everything is inside of there. And we also share these recordings on YouTube for you as well. Now, if you are new, if you landed here, you're very new to crypto and Web3, I always like to just give a bit of a warning. So for those of you that have been doing the bootcamp, this is going to sound repetitive. For those of you that are new and you're watching this recording or it's your first time here, it's going to be information overload. It's like learning a new language. You need to learn the terminology of crypto and Web3. And then when you're starting to learn about crypto trading, it's a whole nother world. You not only have the Bybit platform that you need to learn how to use the demo account. You need to learn how to read the charts. So it's a lot. So just be patient with yourself. You're not going to learn it overnight. We're here to help you. Keep going into the group. Keep asking questions. It's very interactive. Go in there, ask questions. One of us will help you and point you into the right direction. And we share all the resources in there for you as well. And as always, be careful about scammers. I'm actually at a digital transformation workshop, and I have been learning about all the different ways that hackers can hack into your business, but especially in crypto, we're just a little bit more susceptible to it. So please just be very careful out there. I don't care if it's crypto, romance, financial, scammers are out there, especially in this digital economy. And with AI, it's even making it easier for them to scam people. So quick disclaimer, all of this content that we provide for you, even though we are teaching you the ways to trade and potentially invest in different types of cryptocurrencies, it is not financial advice. We always recommend that you do your own research. If you attended Monday's session, or if you go and watch it, I actually went through the differences of the different blockchains and how you need to go and do your research and understand, are they fully decentralized? So it's really, really important that if you're going to invest in an asset, that you understand it. So please make sure that you do your own research. And as always, this content is always recorded. So let's talk about events before we jump in and cover today's topic of learning. We host a lot of different events. And for the next few weeks for our bootcamp, we're bringing in a whole bunch of guest speakers. So tonight we've got Ben. We have we've got DAOs, we've got metaverses, we've got dollar cost averaging, investment mindset. So if you want to see kind of who the guest speakers are that are coming up, you can go ahead and register to the Luma calendar. You can also go onto the EvolvH3R or even the ATB website, and you can go to events and you'll find all of our events that are listed there. All Things Blockchain, who's one of our education and community partners. We also host a series of different events, both online and in person. So we'll be at Token 49. We've got some online events coming up. All of our in-person events in Brisbane, Queensland, because that's where I'm based in Australia, they're all live streamed as well. So you don't necessarily need to be in Brisbane to tap in and learn from some of our guest experts that join us, and we'll be hearing from OKX next Tuesday. And lastly, EvolvH3R, which is our women's focused events. We are going to Token 49. If anybody's going to be there, please come and join us. We'll also be doing some events in Sydney, and we do tons of different online events. We actually hosted one yesterday. It was an online networking event, so you can network with people. We put you into breakout rooms and you get an opportunity to network with people in your living room. It's amazing. So if you haven't already registered to our Luma calendars, both EvolvH3R and All Things Blockchain, I highly recommend that you do, because that's when you're going to be getting notification of all of the upcoming events, both in person and online. All right, so last thing I want to touch on is, if you haven't already joined the group, you can win. We have prizes. How can you win? There's quizzes, there's forms. And if you're like, oh, well, I've only just started, that's fine. If you're dedicated and you do all the quizzes and you fill out all the forms, you can still be in the running to win. So we've got some cash up for grabs. Well, when I say cash, I'm obviously talking about stable coins, USDT. If you don't know about stablecoins, go back to the first lesson. Bybit is going to be sending you some merch boxes straight to your door. We are partnered with the Australian Crypto Convention for those of you that are here in Australia. And then we'll also be giving away some memberships to, not memberships, scholarships to our mentorship program for EvolvH3R. So if you want to enter to win, you've got to be playing the game. So get in there, do your quizzes, fill in your forms, interact, and you can win. Also, we will be providing, when I say we, this is the boot camp. If you go and sign up for the Bybit card using our referral link, we will send you 5 USDT just so you can see how easy it is for you to spend crypto. On top of that, Bybit have their own promotion that if you deposit $100, they will give you 20. So if you go and deposit 100, you're basically going to get 25 on top of that as a bonus. Now, there is a form that you need to fill out. It is the Bybit claims form. And if anybody's interested in that, you can DM me. We've shared it into the group previously, but just a quick little reminder that you can have that. Now, I'm going to hand it over to Renee shortly, but if you are new, or if you're just coming across this video, or this is your very first time joining us, please, please, please always start trading in your demo account. We want you to learn and practice before you jump in there and start playing with real money. Now, I'm going to pass it over to Renee. We are at week 5, okay? So next week, she's going to go into more advanced trading. She's going to go into some strategies, and then finishing it off with mindset and journaling. And if you've missed any of the other weeks, you can catch them inside of the group. So I'm going to pass it over to Renee. She's going to give you a little bit of a rundown of how tonight's session is going to go. Then Ben's going to pop on, and I'm going to leave it in their hands. So I'm just going to quickly stop sharing and hand it over to you, Renee.
Awesome. Here we go. Hey guys, how y'all doing? Can everyone see my screen good? You can hear me good? Give some thumbs up in the chat, please. So I'm gonna have a quick look, make sure everything's working. Yep, Danielle, thank you. Michael, thank you very much. Everyone can see my screen. Awesome. So thanks for joining us for week 5. How time has flied. We're already halfway through. So today we're going to zone in on fundamental analysis. And so basically a lot of what we've been talking about is technical analysis, which is like actual charting. But now we're going to talk about a few things that go on a little bit more behind the scenes and in the macroeconomy on a bigger scale. But I'm going to bring in Ben to start with, and this is kind of his expertise. So I'm going to bring Ben in at the start, and he's going to go over his little intro to fundamentals. And then I'll come through in the end and we'll finish up and I'll show you a little bit of my spin on fundamentals and some of my favorite websites. So here we go. We've got Ben. So Ben, I'd love to have you come up and share your screen and get to introduce yourself to everybody.
Awesome. Yeah, thank you, Renee and Danielle, and everyone on the call. So we've got a good little audience. And for those that were in the first chat, you sort of would have seen a little bit from me and probably what we do. And I know I've spoken to a couple people that reached out. So thank you very much to everyone. And the same goes for anyone that does want to have conversation about what we do. Always happy to do that and talk broader on the macro side as well. I wanted to actually approach this from a little bit of a different way to what I think Renee, I saw the slides that she put together, and she's really put together a very nice overview of trading. And the thing with fundamentals is that there is such a broad amount of information, and yet there are many successful traders who are incredibly successful without any fundamental analysis. You can simply rely on technicals because the technicals is essentially numbers behind what we see fundamentally. However, there are different things such as, the recent thing that we had with Jackson Hole and what we saw with the announcements in the US, and the US tends to affect the rest of the market. And the way that I describe trading is that it's to become a successful trader, it's sort of more like an accretion of thousands of micro skills over time. And you learn, oh, okay, when the US, it's sort of pattern recognition. When they announce something in the US to do with announcing interest rate cuts or something like that, it tends to affect the market in this way. And that's kind of the cause and effect relationship of fundamentals. But I think what goes even further beyond that, the most useful thing for fundamentals is to have a resource or place that you look for macro updates. And so my biggest tip is having a source of truth or multiple sources of truth that you like. And so obviously I'm going to plug our YouTube channel because I think our YouTube channel with Finsightful. Wait, this is sharing the YouTube, is it? I can't see if it's sharing my
No, we see the Canva slides.
So when you
canvas slides.
share, you should be able to select the screen that you're sharing. The
Yeah, I think I just picked the wrong one. Yeah, there we go. Okay, so this is probably my first tip. Have a source. Now, I really like Real Vision. Real Vision is good, and The Journeyman by Raoul Pal. So Journeyman Raoul Pal. His channel is great, and I think they do a lot of really good work. And he tries to sort of simplify it on a monthly basis. And so you're going to have your strategy that Renee will be talking about, and whatever strategy you choose to use, the biggest piece of advice for, I guess, fundamental and technical trading is stick to that strategy and know how the fundamentals that you're looking at complements that. So I really like something like the Journeyman for overall market direction. The thing with fundamentals generally, particularly from a macro lens, is that macro tends to be somewhat non-specific. It tends to be generally or directionally correct, but non-specific in a this is exactly what's going to happen way. And that's where technicals and your trading strategy comes into it. And then with our channel, it's what we try to talk about is because Matt is a financial advisor, and this is where I want to go with the next part of the idea of fundamental analysis. We try to cover all markets and understand directionally where are the markets going. And so what tends to be for Bitcoin, the best index for Bitcoin, the best index for crypto is Bitcoin. That will tend to guide how the rest of the market will perform. But the other thing to really consider is how do altcoins move with other altcoins? And I don't want to get too much into the specifics because I know Renee's going to kind of cover some of that. But the thing with fundamentals is that it's very opinion based. There's not a lot of this is absolutely what happens every time, and that's the nature of trading as well. Is that you're just playing with statistical odds in your favor, and so whether it's a chart pattern or fundamental announcements, you never 100% know how things are going to react, but statistically, it's in your favor. So that's one thing to consider, and having a source of truth to regularly layer that knowledge in consistently is very valuable. And so instead of going into, do these specific things, I think having one, two, or three people that you trust and understanding where they sit in the lens of trading as well. Because you can have a really good trading mentor like Renee, and you can also have a good macro mentor such as Matt, or the journeyman Raoul Powell, such as some of the other fundamental providers of macroeconomic information, and they will complement each other really nicely. So understand the biases and the background of the people that you're following, and that's the best piece of advice I find from a fundamental lens, because you're not going to learn everything in a day, and Renee's got some really good slides together. And what I wanted to talk about on top of that is really the next part for me of fundamental analyses to actually be useful for trading is understanding, and this is sort of what I talked about in the first presentation, actually understanding where you're at in terms of, if I just present this, where you're at in terms of your trading journey. What are you trying to achieve, and what is the, I guess, end goal of it all? Because I find, talking to hundreds of traders all the time, they get caught up in wanting to make a lot of money, but they don't do the fundamental things that goes beyond the market fundamentals to actually understand what they're trying to achieve. Because firstly, you're going to have a very different strategy and strategic approach if, say, you've got surplus cash flow and you've got the ability to dollar cost average, versus if you don't have that and you're trying to live off a trading account. Because fundamentally, you can trade with a nice strategy that's going to continue to have a risk reward, and you've got a capital balance in reserve, but you can also either top up that account balance or purchase other assets or use other things that are going to support that trading journey. And so I know it's a little left of field, but I believe it's important to talk about because it sort of ties into that wealth mindset and the journey with Web3 and the journey with crypto. And so when, I guess I'm throwing around the word fundamental a lot, but really for me, fundamentals in terms of trading and wealth is that if you don't have consistent tracking on your spending, consistent control over the cash flow, don't have funds bucketed, I think it's a massive missed opportunity for a lot of people who want to get into trading, because at the end of the day, trading is a journey. And so obviously we talk a lot about leverage, and we believe a lot in accessing equity intelligently and structuring finance intelligently. And we'll talk a bit more about this in a more concrete fashion in week 8 with a sort of journaling and trading plan. But what I wanted to do was sort of introduce that idea that really an important part of the fundamentals is having the long-term journey mapped out and understanding what's possible, because trading and investing, it skews to the top. It's a compounding vehicle. So as you put more time in, as you build your capital balance, you'll notice here's a sort of 8-year period to get to 50K, and then there's a 5-year period to get to 100K, and then to get to a million, you got 10 times the amount. That's only a similar time period. And so obviously this is a rough set of numbers, but it's important to keep that bigger picture in mind when looking at the fundamentals, and trading sort of amplifies that. So I wanted to talk about that because it helps to identify, what is the strategy going to be? And obviously we're big on property as well. And so understanding the fundamentals that Renee will sort of talk about, once you're in tune with macro, you can know when better times to borrow are. And one of my colleagues, Olga, will be talking about that in the dollar cost averaging section as to when good times to invest are, and the mindset of dollar cost averaging and everything like that. But this is something I drew up, and it's basically, we talk about millionaire in 5 years, and with trading and with a solid trading plan and taking your time and making sure you master a trading strategy. Essentially, a trading strategy is basically, I describe it as gambling with odds in your favor. And as you start to master it, you can build that up, and then using other things such as equity and property, and having a proper phased approach to use that intelligently without taking on too much risk, I think that's a really important thing that I wanted to talk about with the fundamentals side of things. And I guess like I know that's a bit of a zoom out and a bit of a, I guess, change of pace from the traditional looking at charts, trading side of things. But at the end of the day, what we're looking at with charts is price movement of assets with other people that are moving the markets. And so it's very easy to get caught up in, just focusing on that side, but there's still a huge amount of opportunity. And the thing with trading is that it kind of comes down to once it really boils down to it, it comes down to the risk management and the allocation of capital. And so I'll go into something that I wanted to present, which is something that I've been working on with Bybit in helping them to, I guess, simplify the journey for their users. Because what I find with a lot of traders, and this is something that comes into the trading plan side of things, but for me, it's actually one of the more important things fundamentally, because you're going to have a trading plan, and Bybit has some great products and things that can help people to be able to, I guess, piece together their basic knowledge of the fundamentals to then allocate things intelligently. So this is an example of, as a guy from traditional finance, I'm very big on portfolio allocation and ensuring that capital is used intelligently, because I find a lot of traders come in and they will deploy 20 to 30% of their capital because they're trading with a certain amount of risk units, and then the rest of it just sits there and doesn't get touched. But a more intelligent way to approach that, I believe, is having an understanding of different options that are out there from a sort of fundamental sense. And what I would say fundamentally, well, it's not quite the quote unquote fundamentals that most people talk about, but with DeFi, with crypto generally, and with a lot of the strategies that exist, such as bots and things like that, it's a very important thing to consider, particularly with DeFi, where you can deploy capital into things like liquidity pools. I know that Renee, you might have touched on this a little bit, but it's sort of liquidity pools and things that basically validate the network and help to facilitate the Web3 ecosystem, can generate significant income for people. And it goes beyond trading, yet it's something that's fundamental to Web3 and crypto. And so Bybit has really tried to sort of simplify that with some of these bot products that I'll talk about just in a second. But I want to relate these back to, I guess, the quote unquote fundamentals, because I think they can be quite powerful. And I guess it sort of goes, it's a bit more like technical analysis. And so I'm jumping around a little bit and a bit outside of the traditional scope of fundamentals. But I knew that you would cover that off really well, Renee. And I just wanted to talk a little bit about these, because for me, when I talk to people about trading and they're like, oh, how do I master the fundamentals? The thing that I say to them all the time is, don't lose the forest for the trees. Make sure that you've got someone that you follow, that you like generally. The more you can understand about macroeconomics, the better. But at the end of the day, you can be a very successful trader without understanding the fundamentals. So it's not to say they're not important, because they definitely are, and the best traders tend to really have a good grasp on them. But you can also just stick to a basic strategy and use them. But I know that this is an example of an allocation, and I don't want to get too much in the specifics, but traditionally in the investing world, you're going to have a 40% allocation to high risk, 40% allocation to moderate, and a smaller allocation to lower risk. And I would put the trading balance that you're going to be trading with, the active trading capital, as that higher risk category. And so, trading, it really is a journey that you're on. And so in Bybit, they've got these bot products that you can use very simple analysis of the market, whether it's trend line strategies or whatever. And again, this is not like a bot tutorial session, but it can be a good way to leverage your basic knowledge of the market to know roughly the direction that it's going in. And then say, for example, set up a basic spot grid or a futures grid where, okay, I am confident that the market's going to go up. And so these spot grid can be set up where you're able to just profit off the bot doing its work on the way up. And so that's a good way to deploy some capital into the market in a way that, okay, it was otherwise going to be sitting there. I know that the market's going up. And so with some very basic understanding of these quite simple trading strategies, you can actually implement knowledge much more quickly than needing to execute all the buy and sell orders. And so that's something that, again, this session is not specifically about that. And if people are interested in that, I'm happy to sort of run through that at a separate time. But for me, when I'm giving people, when they ask me about, oh, how do I understand the fundamentals? It seems so complicated. I tend to, because again, I have these conversations all the time, I tend to help them zoom out a little bit and see the bigger picture, because crypto generally, when you're investing in Bitcoin or Solana or whatever, these are the greatest performing assets in history. I'm looking at one of the slides here. The annualized return for Bitcoin over the last 12 years, 13 years, and this is one of the things that Raoul Pal talks about in his Everything Code, the annualized return is 139%. So obviously that is exaggerated and we'll probably won't continue like that, but we're dealing with incredibly high performing assets. And so often the most simple trading strategies, very simple trading strategies, can work really, really well. And having that understanding can really move the needle forward. So that is a little bit about what I help people to say or understand. And I guess one thing that I would say to those looking at fundamentals is obviously have those mentors, but if you can talk to traders who are out there in the market, what I find talking with a lot of the Bybit VIPs is that they have a very simple, straightforward strategy and they just stick to it religiously and they don't break their rules. And so I know that isn't quite fundamentals, but what they do is they layer those fundamentals onto that side of things. So the last thing I just want to quickly touch on is basically this sort of reality of the trading journey and why I sometimes do talk about those bot type examples, because what I find they allow people to do is they allow people to really sort of understand the market or have an understanding of the market and see how these simple strategies that are built, like a bot grid, for example, is a simple strategy where it's buying as the market's generally going up and it's helping to execute sort of micro trades within these certain grids. And so it's quite a simple understanding that can really move someone's account balance forward while helping them to actually learn the intricacies of trading. And obviously it will be a little bit outside of the approach to the fundamentals, but at the end of the day, we're in crypto. We're here to master some kind of trading strategy. And it's not going to interfere with, say, like what Renee would be doing, but it's taking in what I consider the fundamentals, which is actual personal fundamentals. What account balance are you starting with? How much capital do you have elsewhere? Most people aren't going to deploy all of their capital into trading straight away. Most people probably have 100,000. I'm sure on the call we've probably got people with a decent amount of capital, and so you want to dip your toe in the water with trading. But I find that if you don't have that big picture in mind and you don't really understand what's possible, and this is why I'm so big on mindset. With the best traders, they're experiencing 1,000% returns per annum. I'm not there yet because I'm still on my trading journey, but I know what it's possible to get there. And I want to make sure that the actions that I take and the information that I take in is sitting within that type of framework. And so, really, if you phase it out, it's a 18 plus month. They tend to say trading is a 5-year plus journey. And Renee, I know you would probably attest to that, or potentially even longer, 10 years. But I find that having other things that you can use to take some of the pressure off so that you can bring capital in other ways, or very basic things like bots, or like what we're really big on here is a lot of people come to us to trade, but then we say, look, trading's a journey. We have an algorithm that we use, and the algorithm is very technically based. We're going to provide you with these market scans every week, so you can get a macro picture and you can start to learn macro. But also, what would probably be a really good thing for you would be to look at borrowing some money in terms of the equity that you've got and deploying it into X, Y, and Z, so that you take the pressure off that need to earn, and then you can master the trading strategy. So that's kind of, I guess, fundamentals, what I tend to like to say to people. I know it's a little different to what most people will talk about, but I know that Renee's going to do a really, really good job in this next phase of giving you that traditional overview of some of the fundamentals. And I hope that, you know, it's somewhat of a useful way to look at it from a more traditional finance lens as to how we build that overview for people. So that's kind of my overview. I'm sure there's probably potentially going to be more questions than answers on the back of that. And Renee, I know you'll do a good job of sort of bringing it home. So that is my sort of spiel on the things to consider.
That's awesome. I just want to open up the chat quickly if there's any questions there for Ben. So we are going to have him back in week 8 to help talk about, excuse me, we're talking about journaling, about reflecting on our trades, mindset, all that sort of thing. So have some think about some of the questions for that week in particular as well, because we'll be going through a whole bunch more on that sort of thing, because it's all well and good to be a trader and to learn how to trade, but if you can't reflect on your trades and then learn from them, then you're never going to get better as a trader. So for me personally, it took 2 to 3 years before I became consistent. So a lot of times people with their trading journey, they give up too soon. They either give up too soon because it's too hard, or they run out of money because they don't have good risk management. So that's why risk management, exactly like what Ben said, is so important. If you have good risk management, it's really your entire basis of your trading plan. But there's a question in the chat there. So what are the best platforms and tools to use? And you've been trading all the different types of markets. And only holding in CoinSpot. Yeah, no. Definitely 100%, 150,000% recommend Bybit over CoinSpot. CoinSpot's a really good basic beginner platform, but it's very limited. So definitely, if you haven't already tried Bybit, check out Bybit. Day trading, yeah, you can't really, unless you've got massive amounts of capital, you can't really day trade Bitcoin without using leverage. If you've got 100K, you could probably do it. But if you've only got $1,000 in Bitcoin, you really wouldn't be able to day trade that unless you're using leverage. Yeah, but that's my feedback. Anything from you there, Ben?
Yeah, like Bybit is obviously the broker that we use as well, which is why I sort of do stuff and present with them as well, because I just find that they are really ahead of the curve on a lot of things. But what I would say, like based on interested in using CoinSpot, Bitcoin holdings in day trading, I think one important thing to consider, and this is sort of zooming to what I talked about, Bitcoin, like you can get really good depending on how much capital you've got. For example, with we employ a strategy where you're able to borrow against Bitcoin from a cold wallet bridge solution, and you can earn on a basic yield about 11% on that if you've got a certain amount of capital. So if you've got over 500,000 US in Bitcoin, that's something that's very attractive for a lot of people, and it's completely hands off. I would say day trading Bitcoin, I know there are some good strategies around BTC. I'll get to that next question from Martin in a second, but for day trading Bitcoin, you could do BTCD, so you can actually trade, and this is what big hedge funds do. And again, I don't know about your strategy, Renee, but you know, people trading actually as a BTC pair with other market caps, and the goal for them is to accrue as much Bitcoin as possible. So it's really going to depend on your trading strategy there, Jinadan. But I think the more sophisticated trading focused brokers tend to be like the Bybits of the world, and CoinSpot is very much like it's more of an eToro type platform, and they call it trading, but really what people are mostly doing is buying, and then, oh, it went up, I'll sell. Like it's not particularly sophisticated or technical. So that is kind of what I'd say there. You know, I personally use Self-Wealth, and we use Self-Wealth for a lot of clients. And Self-Wealth is great for our broader building out of portfolios, buying US shares, buying indices, things like that. But we're not really trading those. We're kind of more long-term investing. Whereas like Bybit has a TradFi option. It's got things that you can sort of trade a lot of different markets. So I find that for crypto markets in Australia, and I'll answer Martin's question in a second. You probably add some things, Renee. Martin, you asked about Binance, not as good as Bybit. In Australia, fundamentally, Binance, you can't trade leverage. That's the main reason that we use Bybit, is because it's the only major centralized exchange that you can use leverage on. And so that is a massive, massive advantage. And I don't know if you recommend leverage with your trading strategies, but we certainly do. And that's why, yes, we use Bybit. Bybit also has some really cool products like I sort of talked about. And that's why I tend to use them. So yeah, that would be my answer. I guess, yeah, Jinadan, I think it's really going to depend on your trading strategy, because you're using the wallet. But you know, like you could definitely trade on the wallet, and I know traders that do it, but I can't really answer the exact best way, because it's going to depend on, you know, you're looking to hold, are you going to follow Renee's strategy exactly? And if that is, then Renee can give you the best tips on what to use.
Yeah, no, Binance overall is I would recommend Binance. They're major. I think they're still the biggest in the world. They're really well regulated. You know, they've got all the right insurance and stuff. But for my trading style, in Australia, we don't have access to leverage, and unless you have hundreds of thousands of dollars available to you, it's hard to make an income without hundreds of thousands of dollars. Even $10,000, you really can't make a consistent income without leverage. So I do recommend, there's nothing wrong with Binance itself. The platform itself is really good. Would recommend, you know, if as an alternative, and we do also talk about diversification. So if you've got a lot of, you know, if you want to diversify your assets in different exchanges, then would recommend Binance. But for what I do, and for most people starting out, even having access to just that little bit of leverage, which we obviously won't want you to use a lot at the start. Binance has just started offering leverage to accredited investors, which is like $1 million investors. So if you've got $1 million, then yeah, you can now have $5 million. But if you're a beginner investor, because the Australian government just cracked down on them, they basically got picked on back in 2021 because they were the biggest and crypto was scary. And so they really got picked on, and like the government just really went after them and pretty much left everybody else to themselves. So yeah, like I said, there's nothing wrong with Binance itself. It's just for my trading style. It doesn't have the features that I need to be able to do my trading style. Yeah. Is my screen frozen? Oh no. Okay, good. Yeah. That's like, yay, NBN. So for you guys who aren't in Australia, our government also screwed up the NBN, which is our internet. So yay. We pay a fortune for our internet and it's bad. So yeah, awesome. So if there's no other questions, I'm gonna let Ben go. But again, think about some different types of questions you might want to ask relates to what they're offering. And we've also got the link for Finsightful in the chat, in the slides. So when you get the slides, check them out. If you have any questions, you can always reach out to Ben.
Awesome. And yeah, I think for anyone listening, I sort of wanted to give some little nuggets and little bites that might be interesting things. And I would suggest that, yeah, if anyone does want to have a chat about any of that, happy to sort of round it out into what Renee's been teaching and obviously relate back to her work. But, you know, I tend to be better at here's the big picture, and let's not lose sight of the big picture. And I think that's the most important side of what we do. I'm just responding to Jinadan with a further comment. So thank you for having me on, everyone. Really appreciate it. It's been amazing, and yeah, very keen to sort of watch this back and understand your strategy in depth, Renee.
Awesome. No, great. Thanks so much for joining us, and we'll see you next time.
Awesome.
Bye.
No worries. See
Thanks
ya.
so much. Bye, guys. Awesome. So Jonathan, I've also played around with futures as well. I was doing, I was working with a traditional prop firm. So I did it all through them, but they were all based in like either Europe or in America. So I don't actually know an Australian, unless you do something like Pepperstone, like there's a couple of other local ones that you can do it. I haven't personally traded with anybody locally. Everyone that I've traded with real futures have been like overseas. So I can definitely have a look around or ask around and see if anybody else is doing actual futures. But there's definitely options around for you. Yeah, I know you can do it for sure. But again, it's one of those things that if you don't have a large amount of capital, even like a micro is like still a lot, like even just to buy one. So yeah, that's really cool if you're looking at doing that. But we're going to quickly jump back in because we're already got 45 minutes. So let me jump into the rest of my charts. Okay. Yeah. Okay. Oop, I've gone too far. Skip, 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 skip. Here we go. Awesome. Here we go. So, he gave a little bit of an overview of kind of the difference of what fundamentals is. So fundamentals for me is basically, if you want to put it into everything outside of the chart. So anything that's going to happen to the outside of the chart, anything that's happening to the actual on-chain, the tokens, everything outside of the actual looking at the lines in the chart, that's kind of what I think of as a fundamental part of the analysis. There's lots of different areas that you can pull information from. So you're having a lot of traditional finance information. In general, crypto, basically when you're looking at fundamental analysis, you don't really look at any other coins other than Bitcoin. So when I'm talking about, when I'm thinking about fundamental analysis, we're thinking like 99% of the time fundamental analysis on Bitcoin, because what will happen is that this sort of macroeconomic news, something else will happen, and it's all got to do with Bitcoin, and then whatever happens to Bitcoin will then trickle down to all the other tokens. So just whenever you think about that, just think this is really fundamental analysis on Bitcoin specifically. Basically, different things about how liquidity shifts around. This happens a lot to do with what we call the 4-year cycle. So in crypto, you guys all heard of the 4-year cycle, about how Bitcoin runs on a 4-year cycle based around the halvening. This is all based on that sort of theory about liquidity flows. And so basically what happens is that the money originally will flow into Bitcoin, and then it flows into Ethereum, and then it flows into the major caps and to minor caps and into basically all the rest of the shitcoins. And that's part of the liquidity cycle of the way that money moves through the different cryptos. So that's part of the fundamental analysis of the cycle. And then you do also have token use specific events for specific things like happened with ETH, like running through. There's something happened with crypto.com today. I don't know if anyone can fill me in the chat. I don't know why crypto.com, like Crow went up like 40% today. I have no idea. So if anyone knows, like let me know in the chat, because I haven't read the news today. So that was pretty crazy. But obviously something fundamental happened to crypto.com, like something fundamental. This is not like you couldn't have planned this, you couldn't have looked at the chart and known that it was going to go up 40%. Something fundamental happened to the actual token for it to actually do that sort of thing. So that, again, token specific events and crypto news will affect the charts in that way. So let's have a look. Oh, he did. Wow. Okay. So apparently Donald Trump decided to add crypto.com to their strategic crypto reserve, which is very, very cool. Awesome. So one part of fundamental analysis when it comes to Bitcoin is what we call on-chain analytics. And so one of the coolest things about crypto is that it's 100% observable. So we can see every single transaction that's ever happened on chain. Everything that happened to Bitcoin from the very, very first block, we can see. And so what that means, as opposed to other sorts of instruments, we can see the way the money flows over time. And so a lot of people will get really like into what are called on-chain metrics and be able to see the capital flows in and out of Bitcoin over time. And so you'll see a lot of the sort of thing, long-term supplier, short-term supplier. You'll see a lot of times, so this one in particular will show, so you got your long-term holder supply and short-term holder supply. And what you'll see is that over time, you've got the long-term holders buying, and then they'll start selling. And what's happening? Short-term holders, sorry, are the ones buying. And so the smart money, what we call the smart money, is the long-term holders. They're selling into the short-term holders, the dumb money, or the retail traders. So this is one of the massive things that you can see that happen on chain. This is right here. This is a warning sign. When you start to see on chain the long-term sellers selling, that's a really good sign that we're getting towards the top. It doesn't happen straight away because this is the top of the selling and this is the top of the market. And so what happens is you can see that the long-term sellers selling, retailers buying, we get a peak and then the market crashes. The retail people start selling. Who's buying? Smart money. So these are really, really interesting patterns that we see over and over again when you're looking at the on-chain metrics of Bitcoin. A lot of times we can see exchange flows. So this exchange flows is basically what happens when we talk about stable coins. So when we have a chart in particular that we can show you at some point called USDT dominance, and so tether dominance. And so what happens is when you see the amount of tether available increase, you'll see the opposite happen on the exchanges. So basically, you want to kind of watch this as basically as the stablecoin amount goes up. It can be a good thing or it could be a bad thing, because if there's more stable coins, it could be because they're about to buy something, or it could be because they're selling a lot of stuff into stable coins. So this is why you got look at USDT dominance as one chart. There's a couple of different charts in that sort of exchange flows that you can look at that we'll have a look at. The next thing we're going to go have a look at real quick is funding rates. So funding rates have to do with futures. And so when basically we've got really strongly trending markets in one way or the other, the funding rate will either become really positive or really negative. And depending on which one it was, it can lead to something what I've talked about before, which are called short squeezes or long squeezes. And so basically that's the market makers pushing the market up. They're seeing it's really over leveraged. And at these points, you'll see some of them push and do a squeeze and basically flip the market. Okay. So here we go. So this is another thing. Ben did touch on this a little bit, talking about BTC dominance and then altcoin trends. And so I'm not sure if everybody knows this. So in general, when you're looking at a chart, it's in BTC, USDT, or USDC. So it's in the Bitcoin coin and then in Tether. So this is in US dollars. But you could also look at every single coin in terms of its Bitcoin dominance as well. And so there's a couple of different ways to look at charts. So we can see Bitcoin dominance, number one, Bitcoin as a percentage of the market. So that's one way to look at Bitcoin dominance. And we can also see a token's performance in terms of Bitcoin. So there's two different ways that you can look at a chart. Depending on the way that you can interpret it. So a lot of people will use the Bitcoin amount, and they can also look at the percentage of Bitcoin as a percentage of the market. So, and so basically, one of the ways you can interpret Bitcoin dominance is if Bitcoin dominance is going up, that usually is bad for altcoins because it means Bitcoin being the safe haven. If Bitcoin dominance is going up, people are pulling their money out of altcoins and back into Bitcoin, which is making Bitcoin dominance go up. That's usually a bad thing because it means that people are scared to put their money into the more risky altcoins. So when Bitcoin dominance goes up, that's usually bad for altcoins. And the same is true when you're looking at the Bitcoin token amount. If the Bitcoin amount is going up, that means that the, sorry, if the Bitcoin dollar value is going down, that basically means that token is going down in value opposed to Bitcoin. So if it's going down, you might as well own Bitcoin because Bitcoin is outperforming that token. So that's a really interesting way to also analyze different tokens. So if your token is going up in Bitcoin dollars, that's a good thing because that means it's going up in terms of Bitcoin dollars. And then, yeah, of course, you want to look at the opposite. When Bitcoin dominance goes down, that's good for altcoins. And so when you're looking at that particular indicator and looking at those trends, if Bitcoin dominance is going down, you might get more confidence into putting more money into altcoins because money's flowing out of Bitcoin. Can't see that. So one of the other things that we look at is spot versus futures. So in general, when people are buying spot means actual buying the coins, the tokens. You're actually buying Bitcoin, you're actually buying Ethereum. When markets are strong and markets are going up, you will see a lot of people an open interest into spot trading. So this is always a really good sign if people are actually buying the underlying asset because that usually means that's going to continue to go up. If all of a sudden you start seeing open interest in the spot market in particular go down and then futures markets going up, this is usually a negative sign for turning at the market because it means people are selling their underlying assets and they're buying the derivative on top, which in general could mean that we're getting a turn or going into a downturn, or people are showing a lack of support of the underlying assets and pulling their money out. This is another reason why you'll see a lot of times the USDT dominance going up is because people will be selling their spot and they'll be putting into stable coins because they are nervous or not too sure about the underlying asset to continue to go up. So you will see Tether dominance or USDT dominance go up when people are selling their actual underlying tokens. So yeah, so futures is what I particularly do because of the leverage aspect to it. You can also margin onto spot, but it's just easily, and the way the platforms work are better designed for doing my style of trading using futures. And in general, I do use the Tether backed futures as opposed to the coin-based futures. We will go over more of this sort of stuff. I have talked about it a little bit. We will go over more of the advanced stuff next week when we're talking about actually trading. Okay, so I'm also going to quickly go, after this, I'm going to go through a bunch of my favorite websites so you can see all this information. But there's a bunch of different sentiment indicators that you may or may not have heard of. So the Fear and Greed Index, I'm sure most people have heard of this or have seen this chart. It's basically just a sentiment indication. When it's really greedy, we really want to kind of be worried that we're going to get some sort of short push. And when it's really low, this is obviously the times we want to buy. So basically when greed is high, you want to sell. And when fear is high, that's the kind of areas when you're going to be looking to buy. Yeah, awesome. Again, I was talking about open interest as well. So open interest is an indicator that you can see on a bunch of these different websites. If open interest is going up, obviously that's showing that that's interest in that token, and it's going down and the opposite. There's a bunch of different other ones. I'll look at these websites, but I'm going to show you these websites and we'll give you the links so you can go and have a look and get lost in the rabbit hole. But again, all of this information, it's kind of macro, it's bigger. It's you do not need to know all this information or take all this information before you're making a decision. It's just something that's just really good to know and to understand and to have in your arsenal, when you're developing your trading plan overall. Because again, I love what Ben says, because when you're coming to trading and investing, it really does need to be an entire plan. Trading is one part of that plan, but you really need to figure out your macro investing profile, your risk management, your risk profile over time, because you will not want to be trading the exact same way at exactly the same times in all the different times of the market in the 4-year cycle, for sure. Okay, so I'm going to go into these websites. Stop show. Okay, so has anybody here seen this page before? It's called Forex Factory. Anyone? Anyone? If you trade traditional markets, you've probably seen this guy before. So Forex Factory is just the easiest way that I know to get this information. This is the news events calendar for the traditional markets of all over the world. So yeah, exactly. So awesome. Yep, yep, yep. Yeah, perfect. So what you want to do, go to forexfactory.com and then go to the calendar, which is right here. But what you can do is actually set up the filter. So what you're going to do is click on filter. And what you really need is just the red one. So what I do is I take off all these other ones, which is just kind of like they're not super important. They're not really going to move the market. The red ones, in general, are the ones that will move the market. And I'm going to take off everything except for the USD. Sometimes they do, like sometimes the yen especially will move stuff. But in general, like the other ones will not move crypto to the extent that the US ones do. And so this really just sort of streamlines it and cleans it up. So this makes it like, oh, I only have to worry about Thursday and Friday this week. So GDP and unemployment. Yeah, like sometimes they'll have, if like there's a big deviation, there will be. But what I'm going to do is go back here. So this was last week. So this is we had a whole bunch of stuff happening last week, and we did see some really big movements based on these sort of things. This one, the unemployment, we had a bit of a move. And so in general, if you're in Australia, these are in Australian times. Make sure that you set up your time in your actual local time so that you know what times they are. So if you're in Australia, 90% of the time these come out at 10:30 p.m. So it's 1 hour before New York opens. So there will like so many times I'll be trading and there'll be a big move at 10:30 p.m. The other one that we see is the FOMC, so anything to do with FOMC, which is interest rates. It happens at 4 o'clock in the morning. And so a lot of times you'll see traders like have these big like watch parties and like stay up all night to kind of see this at 4 o'clock in the morning. So the FOMC is generally something that really happens. Move something, CPI is something that really moves stuff, and then unemployment as well. So if you are trading, and especially trading at night, trading New York sessions, always keep an eye on these things, the red ones for the US dollar, because there's like so many times that you can see these really big moves. I should put this here. So this was Monday. So this was one of those fake out moves that we were looking at. Tuesday, see another one. Was this the Thursday? This is the Saturday. So this is the Jackson Hole one. So this is like midnight Saturday, last Saturday. 12 a.m. on Saturday. That was when Jerome Powell had talked. Like he came up and had a talk and basically said he was going to do something about interest rates. And so what do we see? 12 a.m. on Saturday, August 23. Boom. If you did not know that that was coming, there was nothing on this chart that said that this massive move, like it, yeah, we could have had like this is a W formation, but this is an extreme manipulation move based on news, based on fundamental analysis. But if you go back to what I've always been talking about, manipulation, this is still a W. So most people they probably were assuming that this is going to happen. So what they do is this is actually very similar to the move that we had a look at the other day. So where is it? This is our W. So you can see this is very similar to the move that we saw the other day that I went through. We have this W, we have this manipulation candle in the second part of the W. Let's have a look. And again, we're getting this deviation if we watch it here. So if you were watching this, that's your lower low. And what do we have? A W formation here. So we got a W formation on our MACD. We have bullish divergence. We've got a lower low here with the manipulation candles. You could really see that this is probably going to be a W, but without the news, it would never have done that extreme a move without using the news as an excuse. At exactly 12 o'clock, the market just rips. Yeah, 100% manipulation based on fundamental news, but also with our technical analysis, you could probably see a move was going to be coming because people know this sort of information. It's floating around, like, you know, so it is kind of worked into that way. But you can just see that using a combination of news analysis, knowing that this move is possibly going to come, and then using our technical analysis to be able to see that this move is probably going to happen. If you'd gotten in down here on this move down here, because that's our manipulation candle, our red candle's down, our vector candle's down, the doji candle. If you got in here, 4% move in 7 hours or even just 2 hours. So a massive, massive move. If you had just been watching and knowing that when Jerome Powell talks, the market moves. So that's a really good example about using fundamental analysis and knowing times of different types of fundamental analysis, fundamental news coming out. You can really use that information to your advantage, and you could have made a massive, massive trade if you'd use those two combined. So that's a really cool connection. The next thing we're going to look at. So you've probably seen this around if you watch different YouTubers and things like this. They're called liquidation maps and heat maps. So that one is called High Block. It's like really in depth, and you can really, really go in and have a look at different types of things, but it is paid. So this other one called CoinGlass. If you go to CoinGlass, you can see a lot of basic stuff for free. And what this does is, like we were talking about previously, had the question about how do they see where our liquidation levels are because of these charts. So you've got places like High Block, you've got places like CoinGlass, where you can see on the chart. So right here, you can see this big yellow line is where a lot of people have their liquidation levels because it's right below this support level over here. So there's going to be $93 million worth of orders liquidated if we get down to 109.015. And so I've got this on Bybit. So especially if we know what chart we're trading on, we can go to different exchanges and have a look. But because we're on Bybit, I've chose Bybit, 24-hour. So this is actually funny because this is where my stop is right now. So if you go on my, I'll go in and show you, but my stop is literally down here. So because that's the logical place to put it. If you got in down here, which is where I got in, like down here for this move, that's just the logical place to put your stop loss under that move. And so they can see that. And so they can track in, and if they want to create a lot of movement and a lot of, drama in the market, they just come down. They could take that out, and then a lot of times they will bounce and like take those orders, pick up those orders, and then push it, continue it in that direction. So it's actually funny. So maybe I should move my stop because that's right in the very obvious point of where it is. So there's so many cool things you can look at on CoinGlass. This is the way so you can see open interest. So you can have a look here real quick. So it's basically just like seeing like how much is being traded on each different coin. You can also look at the funding rates. So like we said, in general, anything less than 0.1 is like normal. Anytime you see it over 0.1, that's when the market is really, really overheated in either direction. So either a +1 or -1. And then this is where you can also see a lot of these short squeezes, like long squeezes, because it's really, really over leveraged. And so if you guys missed that explanation before, basically what happens with the funding rate is that it's a fee charged by the exchanges, either like a 4-hour, 8-hour time frame. And what they do is they use that to pay out the opposite side. So say right now the market has been going up. And so in general, it's like slightly positive. So the past couple of 24 hours. What they do is that they use this to then pay people who are going short. And so if you're going short and holding a short position, the exchange will actually give you money for holding that short position. And what they do is they charge the long positions for holding those positions. So it's kind of to try and balance out a little bit of the exchange. But when it gets really, really hot, this is when there's an incentive for the market makers to then go in and liquidate those people because there's just so many at a good rate. And so this is something you want to have a look at. And again, 0.1, but this is like, it's not really crazy right now at all. So it's slightly positive because we have been going slightly up today. So that's all that is. So yes, that's CoinGlass, High Block if you really want to get into in-depth information. The other one is the block, and this is for the on-chain analysis. So if you actually want to see like all the different transactions on Bitcoin, active addresses, so that's another thing you can use is like, we obviously want to see over time active addresses increasing because that means more people are using the network, that sort of thing. Like new addresses, there's so much really cool stuff you can go in here and just really nerd out on-chain volume. Miner revenue, so that's actually an interesting thing I might go over. There's a really good indicator I love called hash ribbons, which is really interesting and very successful. Yeah, so again, this is just like something, again, I didn't really use this to make any daily information choices, but it's just something to know. A lot of these can help you to pick the tops and bottoms of markets. There's a lot of these that will go towards when we get into the top, looking at some of these information will be able to show us where we are and whether or not we're really peaked out, like the one that I showed you in the charts. When we see all the long-term holders really start selling and basically all the retail really picking up, that's going to be a top sign for sure. And the other one is coin market cap. I think that's what you guys said before. So coin market cap, yeah. So coin market cap. So love coin market cap. Love to use it for portfolio information, doing research on actual fundamental analysis on coins. And so basically right now we're kind of in the middle. Like again, we're kind of in the general cycle, we're in a neutral kind of sideways area because it's the summertime in America. There's not a lot of open interest. There's not a lot of like crazy trades happening. And then so it's not really going up. It's not really going down. So it's kind of neutral. Like no one's really super aggressive. No one's really super negative. So you can see that again, neutral greed. And then you can see the yearly highs and yearly lows, which is like really interesting information over time, basically. And then, yeah, like that's just you can see how low it got down here. Like this is like FTX kind of stuff. Whoa, was it? No, that's like this year. That's ooh, that's this year. Crazy. That was super low. Wow. But looking at peaks, all markets, whenever we've gone to like our blow off tops or the other peaks, let's see if we can go to. So, can I go back? Oh, I can't go back. Yeah, I can't go back any further. This one, there's probably another one so you can go back further, but it's really interesting to kind of see at the peak of the market, at the low of the markets. Like if you had gone and bought down here when we were in like extreme fear, that would have been a really, really great place to buy. So you would have bought down here at like, 84K. Everyone's freaking out, everyone's losing their minds. And what happens? It's like, woo, here we go. So this is a really interesting, again, combining it with your technical analysis, knowing where these levels are, it's a really helpful kind of thing to have a look at. But yeah, is there any other questions there, guys? I'm just having a quick look through all the stuff. Yeah, so Roseanne, like you can set the time in Forex Factory to your local time. So there will be one for Brisbane and then one for Sydney in daylight savings. That's also something to take consideration of, because America also has daylight savings. And so what happens is that right now for summertime, New York opens at 11:30, but then the rest of the year it opens at 12:30. So it's like a really late for us to trade. So right now it's actually not too bad. So then it would usually be 11:30 for the news to come out if you're in East Coast Australia. Okay. Yeah, so with those wicks, sorry, I'm just catching up on the chat here because I was looking at the screen. So yeah, so those wicks, like we were talking about with the candlesticks, they're manipulation. So they're 100% pushing down one direction and then swinging it back up the other direction to liquidate people. It's exactly what they're doing. It's a manipulation tactic. Yeah, tariff news. Oh my gosh. Yeah, the tariff thing's like a nightmare. That's crazy. Look into Bitcoin. Let's have a look. Look. Have a look. Not even coming up. That's weird. So yeah. Another thing. Oh, I changed the name. Is that them? Oh, Bitcoin Magazine. Okay. Oh, they must have bought them or something. Cool. Yeah, so like it's just another thing you can nerd out about. So a lot of the guys so if you guys haven't checked them out already, so both Traders Reality and Annie from Trade Travel Chill do incorporate heat map charts and liquidation levels in their analysis. So if you want to see people using that analysis, definitely go check out their charts. They pay for the high block and the other expensive ones, and they'll show you their analysis based on that. Annie even has an indicator that she built that she puts into TradingView that you can get if you're one of her subscribers. So definitely check that out. And that is actually the link that you're going to get with your homework on the charts this week, is a link to Annie explaining how to use liquidation levels on your charts. And you'll see a lot of times, so many of them will coincide with our vector recovery areas. They're all really interrelated. And if you're using that sort of information, you can make better decisions to like where you're putting your stop losses, where to be looking for entries, like that sort of thing. So it is, I don't use it like on a day-to-day level because in general I'm doing like day trades and stuff. So it's like I'm just looking straight at the charts and those sort of things are my indicators. But for longer swing trades and things like that, especially in longer term, it can be very useful to use those sort of things if you're holding trades for periods of days at a time, because you can see where the other people's levels are sitting. You can see where the buy orders are. You can see where the levels are for both sides. And it can be really useful information. So it could be something that you bring into your arsenal, but it's just another tool. Like what we're offering you with all of this sort of stuff is just tools that you can add to your arsenal to help to create your own trading plan, because everyone's got trading plan is going to be different, and like you might find something that you find really interesting and you can tweak it and use it to your own advantage. So that's why we're trying to just give you as much information as you can, and then just have a look and see if it's useful to you. If it's not, then just, again, I don't use all of this stuff on a day-to-day basis. It's just interesting stuff to know. The only thing I really use day to day is Forex Factory for news, because I am a day trader, and that sort of trades, if you can like integrate them together, you can do some really amazing trades, especially like, again, if you've traded futures, like real futures, like NASDAQ and like the Qs and like S&P and stuff. Those trades happen all the time on those nudes, and they can be massive trades if you catch them. So yeah, that's really exciting. Awesome. So yeah, I think that was it for that. Let me just go back. And then we're going, cool. Awesome. So next week, we're going to go over more advanced technical analysis stuff and then how to use advanced stuff in the Bybit platform. So I've been talking to a couple of you guys in the group about trying to figure out those indicators on TradingView. So I'm going to actually do that as well. I'm going to come up with a plan to how to best integrate TradingView with the least amount of indicators so that we can use the free version for you guys. So I've been working on that, playing around with some stuff. So we'll do that, and then we'll show you how to do all of the advanced stuff using the Bybit platform, doing the actual futures trades, how the leverage works, all that sort of stuff as well. Is there any other questions before we go? Because it's getting quite late already. Time flies when you're having fun. Awesome. Oop. I just realized someone was in the waiting room. Oopsie, sorry. Sorry, Franklin, I just saw you. Okay, awesome. Well, so if there's no more questions, guys, yeah, again, make sure you've got your Finsightful. Again, if you guys want to chat to Ben's link is going to be in the slides. There's a whole bunch of challenges here if you want to challenge yourself. I love that you guys are posting in the group. That's really awesome. And as normal, we'll post all of the stuff for the rest of the homework and the practical activities in the group afterwards. Go check that out. And then the link will be up for the video recording tomorrow once we've edited it and got it all done. This is the link to go check out Annie, and she'll show you how to read those liquidation levels, and maybe you'll be able to use them in your trading. I think that's it, guys. Thanks, everybody, and we will see you next week. See ya. Have a great week. Happy trading.